guys, welcome back to my channel. This is a very special video that I'm going to bring you. I'm not going to show you any of the charts today, okay? And I want you to understand that the takeaway of this video is basically chart reading the chart is just not whole of the trading, okay? There are many decisions that you make during the trade and before and after the trade, everything. So I want you to focus on other stuff apart from assessing the charts, okay? Things that are very important for you to become a successful, especially intraday trader. The reason why I'm doing this is a lot of things goes before a trade is taken, and it involves lots of parts that has to align to make a good trading decision, which is highly important but very underrated by many of the traders, or I would say most of the traders. And that is the main reason, I would say, for the failure to become a successful intraday trader. I hope this video will help you. Please share and subscribe with your friends if you haven't done that yet. And so let's dive into this video. It's an educational video, and I'm not going to show any charts. I'm going to help you introspect yourself, basically how you are approaching a trade, okay? So first of all, have you ever sat down and written down the things that you do before taking a trade? So I would simply say, like, breakdown of trade decision making. I mean, you do this like constantly, and then it's kind of become a habit for you maybe, and that's why you just haven't thought about what are the steps you'll be taking before taking a trade. So I want you to understand this very clearly, so that you know what are the things you'll be doing before taking a trade. So that will help you to understand where you are going wrong, okay? By the end of this video, I'm definitely sure you'll be surprised with some of the facts that you discover yourself, okay? So let's break it down, okay, one by one. Like, what are the things that we do before taking a trade, okay? And at least these are the things that you should be doing. If some of the points that it's going to come up now is like a new thing for you, then obviously that's a learning part for you, because these are the things you should be doing, okay, before taking a trade. If you are not doing this, then you have to make sure that that is included in your trading decision process, okay? So let's go one by one. See, first dilemma for most of the traders, intraday traders, is which stock should I trade, or should I trade index like Bank Nifty or Nifty index? Those are the things. If it's a stock, then which stock should I trade? This is a major thing, because stock selection plays a key role, and it's going to be dividing you to become divides the traders from a successful trader and a failed trader. So it's a very important thing, that stock selection plays an important role in your trading journey. So okay, this is the first thing. You have to identify which stock or index should I trade. Now, while discussing on this topic, you have to understand, like, there are more than 1,000 stocks available for you to trade, right? And I mean, some people might just go with these stocks that are that can be traded in derivatives. So stocks that have derivatives, that will narrow it down to somewhere around, like, say 200 maybe, or 220, something like that. And some people still narrow it down to just Nifty 50 stocks. It is like 50 stocks, so they'll be looking. So considering even that, 50 stocks, scanning 50 stocks every day for an intraday trade is a huge toll on your mind, and also it's a big toll on your psychology as well. You will be psychologically drained out by flipping from one chart to another, constantly throughout the day, day in, day out, and it's very easy for you to lose focus. Okay, by especially, I mean, if you're an intraday trader, you cannot be looking for, to trade on a 30 minutes, because if you look for a 30-minute chart, then obviously it will, kind of easily extend to the next day, so it becomes a positional trade. You're not an intraday trader then. You are like probably a short-term trader. That's fine if you look for, if you're okay with that, but I'm talking about only intraday traders in this particular video. Okay, so in that situation, what at the most, the highest time frame that you could trade is like 15 minutes. Okay, and most of the intraday traders use typically 5-minute charts. Okay, so let's assume for intraday traders they use 5-minute charts, and if you have 50 stocks in your watch list and you have to flip through the 50 stocks and you're using the 5-minute time frame, and you keep on flipping one after one after other, and then it's very easy for you to skip some of the really good trades that you would have spotted while flipping through, and then but the next time that stock gets its turn, uh, then you might have missed the opportunity, right? Tell me if you haven't experienced this kind of thing happening to you in your trading journey, right? So this is one thing, and I mean, I have solutions for all the problems that I'm going to discuss here, and I would see this as a major problem in many traders, okay, especially the novice traders who are new to this trading, and then they are so excited, and then just they want to flip through charts, and especially if they have learned some, you know uh, assessing the charts, maybe through YouTube or with someone else, or through experience, anything. If they know, like, they can assess the chart, they just want to flip through each and every chart, and they are in a hurry to find a trade. Okay, so, and well, to be honest, that is not needed to make money, and that is not needed to become a successful intraday trader. Okay, no matter how much that disappoints you, you don't have to flip through charts every day, day in, day out, constantly throughout the day. Okay, so I have better solutions for that, wherein you can channelize your trading assessments and psychological balance, so that you can spot really good trades every day, and you don't have to flip through too many charts. Okay, so this, I would say, how do we do that then? you know you can do this beforehand. You don't have to do it in a live market. You don't have to do it in a live market. Taking these, you have to minimize the decisions that you take during the live market to an optimal minimum. Okay, the bare minimum is, you don't have to, you have to do it before, whatever that can be done before. Okay, so what I'm trying to tell you is, I'm going to show you some of the parts, including the trade decision making as well, but you have to make sure that you have to do preparation is the key, I would say. Yeah. So for instance, if we want to go an analogy, if you want to, if you are in a playing 11 and then you want to go and bat next day or bowl next day, what is it that you do? You prepare yourself the previous day or many months before that, and let's assume at least previous day you go to the nets and practice and all those things, and then you go and execute there. That's all, right? You don't experiment when you are playing, okay, playing a live match. So this is exactly the same. You don't have to do too many decisions or take too many decisions in a live market. That's going to confuse you a lot, and you won't stay focused, and it takes a toll on your mind and psychology. Okay, this one can be done beforehand. I will explain how. Now the next part is, which instrument? I mean, should I trade in equity shares? Should I trade in options? Should I trade in futures? What instrument should I select? This is another dilemma that many traders face. Okay, so they just, they spot a trade, and then now they are confused. Should I trade in futures, options, or equity shares? What should I do? What should I do? And they know time is, they are running against time, because it's a 5-minute chart, and you have to make a decision, and just bang, you have to enter the trade. Okay, that's the second one. That third one is, what time frame should I assess? Okay, they know like they want to assess on 5 minutes, but then again they want to look at higher time frame maybe, or should I use 15 minutes or 5 minutes, or should I go down further to 3 minutes, or maybe even 1 minute, right? So I mean, honestly, most of the traders would have been really tempted to go down to the lower time frames, especially when they're not getting or making money with the time frame they used, maybe 5 minutes. So they go down lower time frames, right? So which time frame should I assess? That's another question. And especially it gives contradictory, you know, kind of say on 5 minutes it might be saying it's a good opportunity to buy, but on 15 minutes or 30 minutes it might be in a downtrend, and it might be saying, oh no, it can go down, right? So that's another confusing part. Next, should I check higher time frames? If yes, what is it saying? So I mean, what is the higher time frame saying? And many people say just stick to one time frame and just follow that. Okay, but in the long term, to be sustainable, you should have a big picture of what is happening, right? So you have to know what the higher time frames are saying, because as the higher time frames have more weightage than the lower time frames. What I mean by that is, 5 minute time frames are good for entering the trade, right? And pinpointing the entry time, but the direction, and then should you buy or sell, should depend on higher time frames because they have more weightage, right? So you were if you follow that, you will be on the right side of the market. So you have to understand that. And so for instance, if a higher time frame is saying the overall direction is down, and on a 5 minute time frame it's probably going up, which obviously is a pullback, right? Because the stock moves in waves, so it's a pullback, and it looks like a higher high, higher lows, and it looks like an uptrend. But the higher time frame, it's just a pullback, and it can come down any moment. So in that situation, you have to wait for sell opportunity rather than buy, right? So the next one is, should I buy or sell? Obviously, I've explained some bit of it. So another dilemma is, should you buy or sell? You are prepared for both now. You don't know whether you want to buy or sell beforehand, and you're confused. I mean, and just imagine 50 stocks plus index, maybe, I don't know if you want that one as well. That makes 52, Nifty and Bank Nifty. So 52 charts you have to scan through, and you are open to both buy or sell. So just imagine the probability of getting the trades and how quickly you have to make decisions, right? Now, next one is, where should I take entry? Once you have spotted an entry, and then you decide, when should I enter the market, where should I exit? I mean, where should I exit is basically, it could be any of the uh, strategy that you use. Okay, you should know where to enter, where to exit. You have some strategies, either you go with 1:1 or 1:2 or 1:3 risk reward ratio, or or just exit before the resistance or support, these kind of things. So you should have to identify where should you exit and what should be your stop loss. Alright, so these are the things that you need. And don't tell me that you are not aware of this and you don't normally do these things. You don't identify the entry. I mean, probably you would identify the entry point. You are not sure where to exit and where to put the stop loss. Don't tell me that, because you are a long way behind then. Okay, because you should already know that these are the three crucial elements of any trade, not just intraday trade, positional trade as well, investors as well. So you should know the entry and also the target and the stop loss. Stop loss, the most important thing. You cannot be trading without the stop loss. Okay, is risk reward good enough? So now it comes, you have identified the stop loss, and you have the entry point, and you have a probable exit point. So is the risk to reward ratio good? That's what you have to check. And then what is the overall market doing? So you have identified some stock to buy or sell, and is it aligning with the overall market? If the market is going up, are you getting a buy opportunity then in the stock that you have found out, or is it a sell opportunity? And so if it's a sell opportunity and the market is going up, it's against the overall market. So you have to make um, you have to be aware of that, and you want to think whether you want to take the trade or not. Is there any news event expected? It could be like quarterly results of stock, or maybe some RBI announcement about interest rate or something. So anything, it could be anything that can impact the movement of the stock that you have selected. And then how much quantity should I trade in the end? Okay, you have got your entry, exit, stop loss, and how much quantity should I trade? So now can you see, we got a dozen decisions to make before taking a trade. And do you really think you can do this in a live market and then take the trade by flipping through 50-odd charts? Don't you think that's ridiculous, and that's simply, you know, over expectation from yourself basically? Yeah. So how it would sound if I said most of this can be done beforehand, which can be considered as a preparation phase, and then you can limit to very few decisions in a live market. For instance, which stock or index should I trade? See, it's all about preparation and hard work before the live entries and exits. You have to scroll through some of the charts. There you can have how many charts, whether you want to go through 220 stocks or 50 stocks or 40 stocks or 20 stocks that you have in your watch list. You do that regularly and see which stock is better. The previous day itself, you're going to assess which stock I would be interested in for the next day. I mean, this is what I do as well. I do this regularly. Usually I have a set of maybe 4 or 5 stocks that I'm bullish on, that I'm interested in buying, and 4 or 5 stocks that I'm bearish on, and I'm interested in selling those stocks the next day. I have that set already done. So I'm down to just 5 to 10, or maybe 10. Let's keep 10 stocks. Out of that, what I do is, if the market is up, I'll be interested in only bullish stocks. So just imagine I've been looking only 5 stocks, and how much pressure has already been taken off from me. I don't have to skip through the 50-odd charts. I just have to focus on these 5 charts. It gets more interesting and easy as well. Just stay tuned with me here. Now, so this one, the first point, we can easily do it beforehand, right? We can assess whether we want to trade in that particular stock or not. So one decision taken out from the live market. The next was which instrument. You would know how much money you have in your account. It's not going to go dynamically changing the very next day unless you withdraw or add money to it. So it's in your hands. So you very well know how much amount you have in your account. And as I said, it's a proper risk management is also involved, which I'm not going to cover in this, but very briefly tell you. Say you shouldn't be risking more than 2% of your equity. Okay, so if you have 1 lakh, you shouldn't be risking more than 2,000 per trade. So you know very well that. And now the question is, futures or options or equity shares. For futures, if the stop loss, you cannot change the stop loss according to your risk, right? Stop loss is fixed, and you have to manage the quantity based on the stop loss or based on that risk. So if you can afford futures with the money you have, then yeah, it's your decision that you can make prior. Okay, in the preparation phase itself, you can decide what you can afford. Can you afford futures? Do you have the risk appetite to trade in futures? Or do you have enough knowledge to trade in options? Or equity shares is the best one. So all these things you can decide beforehand, right, guys? You don't have to decide in a live market. You can do it beforehand. So another decision taken off the table from the live decision right? The next one is, what time frame should I assess? See, this again, you know very well what you should be assessing. Okay, as I said, many people use 5 minutes or 15 minutes, so you decide yourself which time frame is better for you beforehand. And obviously, going beyond 15 minutes or higher time frames like 30 minutes, 1 hour, you know, it that really doesn't classify for a intraday trade, okay, because it can extend to the next day as well. So you decide 5 minutes or 15 minutes, whichever you're comfortable with. I generally recommend not to go below 5 minutes, okay. It can get very volatile, and you know, there'll be lots of whiplashes, and it can hit your stop losses very easily. Next one is, should I check higher time frames? See, this, I said you have to do it because you have to have a bigger picture. So what I do is, the stocks that have chosen, I told you like 10 stocks, 5 bullish, 5 bearish maybe, or 4, whatever it is, those few stocks, I mark the support and resistances on higher time frames beforehand. During the preparation itself, I know where the supports and resistances are, so I don't have to do it in live market, in a live environment, right? So I have already done that, and I know where, if the price is around resistance, I know it is around resistance. I don't have to, and I have already marked those lines that can be seen on even on 5 minutes. So I know very well what is the higher time frames doing. I don't have to redo that thing, which is again a big burden, remember. Now the next question, should I buy or sell? As I said, I have bullish stocks, I have bearish stocks. The stocks that are in bullish category, I never look for selling them the next day, so I clearly know whether I should buy or sell. Do you see, we have already taken out 5 decisions off the table from the live market, right? The next one is, where should I take entry? This is the one that I have to decide in the live market. I'll be very focused. I know which stock, which time frame, should I buy or sell. Everything has been set. Now I just have to wait patiently to take the entry, wait for the reason to take an entry, and exit and stop loss. These are the 3 things I have to do it in the live market. Everybody has to do that, right? And now the risk reward, good enough. I have to do it. Yes, I have got these 3 points: entry, exit, stop loss, and do I have a good risk reward ratio according to my strategy? And then, what is the overall market doing? This also I can do it beforehand. You know, I can see Nifty and Bank Nifty, how are they doing the previous day itself, and then the next day maybe just quickly see. I mean, obviously we'll be in the market and we will be knowing whether it's going up or down, so you can have a quick look as well before taking the trade, or you know, depending on the previous day's assessment itself, you can ignore that as well. Is there any news event expected? This again, you could research this beforehand, right? These are all news, and RBI is not going to come the next day very morning and say like, okay, we are going to share you an announcement about interest rate. It will be announced well in advance, and similarly it goes the same with the quarterly results of stocks. So you don't have to check in the live market about these things. You can do it beforehand, and it is important that you are aware of this as well, because it can take you by surprise if you are not you know, don't know about the news events that's surrounding the stock or index. And then, how much quantity should I trade? As I said, you know, depending on your risk, you just have to decide what quantity should I trade and then trade it. So now let's see, we have 12 decision making points here. After striking down most of the things, what are we left with? You see, we have taken out 1, 2, 3, 4, 5, and then 10, 11. So how many are left now? Only 5. 1, 2, 3, 4, 5 decisions. Do you see what I mean? I mean, try this. I mean, if you haven't doing this, just try this once and see the magic in yourself, how a transformed trader you will be, and how much burden will be taken off in the live market, and how composed you will be by doing this. You'll be focused, and the market is not going to take a toll on you. You don't have to skip through charts. I mean, you won't believe how much stress you will be going through by skipping through charts so many times continuously every day, day in, day out, and then on top of it, if you lose, and it's going to add extra pressure on you, on your mind, even though you think like you're doing a hard work and not getting any rewards. I'm sorry, my friend, that's not going to work. You have to be a smart trader in this particular thing, especially. Hard work doesn't pay here. It's a smart work that's going to pay. So I hope this video helped you guys. Just try it out for yourself, and let me know if you like this, and share with your friends as well, so that it can be helpful for them as well. So the takeaway from this educational video is basically you have to limit the decision making points to a bare minimum in the live market. Whatever needs to be done, it has to be done in the preparation phase, which is before the live market opens. Okay, I hope you got that. Thank you guys. I'll see you in the next video.